It was a strong handover that we got from the Wall Street. This despite the inflation number coming in higher than expected. And right now, the Asian picture is quite mixed.
Durable output jumped sharply to 10.9%, but this was largely because of a favorable base effect.
Breaking news this morning has been the news of the last few days. The block deal of ITC has been executed.
So, well, here's the first take on the index. A strong opening as suggested.
This whole consumption space has had a very divided kind of, scenario, seen a very divided kind of scenario in the last some time.
Pretty much the same situation playing out, where the large cap screen is looking slightly better, though there's pressure even on the Nifty right now. But the problem area for the market very clearly is the broader market.
Now, the mid cap index was relatively steady until at least yesterday, but even now this has got swept under the fall as well.
It is a red screen this afternoon, and what is worrying is what is taking place in the broader markets.
Now, PSU banks find some favor here as SBI and Indian Bank have seen Axis Mutual Fund increase stake.
I believe at this stage, we are nowhere near that risk.
It is a broad-based sell-off that you're seeing.
That was the day so far. A 100-point gap up opening has turned into a near 300-point sell-off by the close of trade. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay and Nigel D'Souza. Good afternoon. You know, we've been facing cuts in the broader markets. We've been seeing the nervousness, the skittishness, the sell-off. But today it's just taken on a whole new level, right? The mid-cap index down 3.5%, the small-cap index down 4.5%.
Today's the real deal. You know, today's the real deal, both on the Nifty as well as on the Nifty Bank. The kind of selling that you're seeing, and you have a large weight in there that's actually batting for the bulls, which is ITC. And still you have the Nifty that's down nearly around 300 points odd. You know, the Nifty Bank actually is doing a relative outperformance today, and it has an element today because it will play out weekly expiry. So let's see whether that expiry can go, can turn things around a little bit, because as of now, at least it's doing a relative outperformance. But the story of the day is the advanced decline ratio.
Yeah.
I was looking at the last few days. You have advanced decline ratio of 1:5, 1:6, and we were saying things are looking weak. Today, it's 1:18. As we speak. So you just pull up the advanced decline ratio. That'll tell you the picture. You have only 126 stocks that are advancing right now for more than 2,200 stocks that are declining. So that's the number that is the most worrying. The last few days, you have had 300 to 400 stocks that have been advancing. That number is down to around 126. And today is the real shakeout, which the markets were fearing, particularly in the broader markets.
So the question is, does it end today? Is this the final shakeout, or is there more pain ahead, right?
You know, I think while obviously we'll be asking these questions to our guests, but this is such a familiar tape, and this is how it plays out every single time in market cycles, right? This is a market, if you pull up the small cap index, the small cap index has not seen a meaningful correction. What is a correction? At least a 10% decline from the top. We've just not seen that in the last entire 1 year. It's been a one-way, breathless rally, starting from April and sort of going all the way up till the end of December. And a lot of people who got on the small cap bandwagon, mid cap and small cap bandwagon, they're not used to seeing days like this, which is always a point that we discuss with guests as well, that these days happen. The question is, are you prepared for them? Do you have the liquidity for them or not? And that's what's playing out right now. So, second guessing when it ends probably is a very difficult proposition right now. But the fact is that this is the third day running of the slam dunk. And typically when momentum becomes so fierce, at some point in time, you hit that bottom. Whether it happens today in the next 1 hour or not, we cannot say. This is what I wanted to talk about. The pace of the fall really gathered steam in the last three days. I mean, this week, what are we talking about? We're talking micro caps losing 9.5%, bam, gone in 3 straight sessions. Ditto for the small cap index. This is what happens in a momentum market when things turn on the other side. Now, we'll try and find, of course, reasons, and there are 2 very clear ones straight away. So what caused, I'm not using the word bubble because that's a huge point of debate right now, but, what pricked what was a great party that was going on right now? 2 clear reasons. One, the street is still, fearing further regulatory action. Whatever we saw with respect to some parts of the businesses of JM Financial, of Paytm, what we saw with IIFL. So whether there's more on that front, and not just, on individual companies, the fact is that the street also wants to understand what happens at the end of these stress test results. The fact that the regulators are saying that we need stress tests, there is froth in the system. I mean, the street was ignoring it for the longest time, but typically these things even out. And remember that this happens on Friday. We don't know if the results come in during market hours or late. The bigger question is, what afterwards? Will mutual funds be told to rebalance portfolios? Will there be a curb on the amount of money that small cap funds can take in or not? What happens after the stress tests is the more pertinent question. But for what it's worth right now, it is a one-way decline. And what's interesting is that even that switch trade, sell smaller stocks, buy larger stocks, even that's not working. And also what's perturbing is, guys, let's look at the global screens. We had a fantastic rally on Wall Street.
Yeah.
This has got nothing to do with the rest of the world. Most of Europe is trading positive right now. Asia was fine. Wall Street digested the higher CPI number very, very well with, fresh highs on a lot of those indices, the Nvidia moving 6-7% higher. So this is a complete local phenomena. Right now, from being a mid-cap, small-cap, micro-cap phenomena, I think the sentiment is now on the large-cap screen is getting also a little soured. No sort of denying that, I guess.
Even ICICI Prudential, right, is now the 5th mutual fund where they're going to restrict inflows into the small-cap schemes. They will allow SIPs up to 2 lakh, but lump sum investments into small caps have been restricted from the 14th of March, so basically immediately. And now it's the 5th mutual fund to restrict. So they've taken note of that AMFI warning when it comes to the small cap space. But PSUs have gotten hit. The Nifty PSU index is down more than 5%. And the other pocket is the Adani Group. So the large cap Adani Group stocks, whether it's Adani Ports, Adani Enterprises, slammed down today.
All right. We've got many guests that are lined up for you on the show. And let's get in a couple of them. We have Mr. Prashant Khemka, founder of White Oak Capital Management, who joins us on the show right now. Hi, Mr. Khemka. Good afternoon, and always good speaking to you, sir. It's that sort of a day when the market wants to hear you. Market's a little bit nervous. We have the broader markets under pressure. The headline index as well as not getting much support. What are you making of this entire sell-off that we're seeing?
Good afternoon, Nigel. Thanks for having me here on the show. I think if you look at over the last 12 to 24 months, or even I would say somewhat longer post-COVID, it's been somewhat of a one-way street. And equity markets, as we all know, don't just return month after month, quarter after quarter, year after year, positive returns necessarily. So there was this some overconfidence setting in amongst investors, particularly as it relates to small cap names. Small caps, despite the 10-11% downtick that we've seen over the last few weeks since the high that was reached earlier this year, it's still up 60+% from March of last year. Yeah, at its peak, it was up 80 or nearly about 80%. So there was a considerable amount of excess that has been built into certain segments of small caps. And so it's a timely, I think, I would say even an awaited correction. As they say, a stitch in time saves 9. Corrections like this safeguard the market from a collapse later on. So I would say it's a healthy correction and not something that should be worrisome.
Okay.
Mr. Khemka, hi, good afternoon. Surabhi here. Completely understand the point that you're making. I think the question right now is just purely in terms of technicals. Do you think this is getting exacerbated because of leverage in the system? Is there a lot of leverage in the system? We know that, retail was really piled up on mid-cap and small caps. So the ferocity of the fall, the fact that we've seen this 10% knock in just 3 sessions alone, where are we now? Do you think we're somewhere close to the bottom, or is it hard to say?
As we were just saying a few minutes ago, it is not just hard or difficult to say. I would say it's impossible to say where we are. This could be an interim bottom, or there might still be a long way to go. Nobody has a clue. To your earlier question of whether it's leverage that exacerbating or other actions that the industry is taking, these are all, whenever the market falls like this, or a segment of the market, because the broader market or the larger caps are only off 3% from their all-time peak. Yeah, it's the small cap and the micro caps which are down double digits. So whenever there is some such action, there's always a desire to attribute it to something specific. It is possible that these things that they're there could have contributed to catalyzing this fall at this moment. But otherwise, it's just the sheer momentum with which it had gone up over the last 12 months itself is a good enough reason for at some point to take a pause and have corrections like this. Now, every time that it corrects, there would be some concurrent factors to blame it on. And I think that is what it is, these other factors that we talked about. If these factors were present at a time when market was not at such a excited stage, I would not say euphoric, but market has been at an excited level for some time. It was only due, I would say, regardless of any specific contributing factors.
As you said, timely and a much-awaited correction setting into the market. Prashant, afternoon, and thank you very much for joining in. Is there a lot of evidence of margin-based selling which has come into the markets right now? Because the way the prices have snowballed on the way down, have we seen retail HNI participants, unwind their holdings in small and mid caps? What's happening in terms of the flows?
Hi, Rima. So I haven't seen that kind of a data, nor has anyone, brought to my notice that kind of a data. It is possible that on the margins, some of that would contribute as well, but there's nothing that I've seen to suggest that is what is primarily driving it. Yeah, it is a modest, it's still only a 10-11% correction. I know it feels quite rapid because of, it's happened in the course of a week or so, but it's still only a 10-11% correction after an 80% rally in small caps.
All right, Mr. Khemka, what do you buy then? Everything went through the roof at one point of time. And if you were talking very rationally, actually, you were finding yourself isolated because the markets just kept going. 6 months ago, if you said that the small cap index is looking overvalued, everyone would say yes. But the market just continued to go up. So as of now, if you were to look at a few stocks, or maybe an index, financials, I would like to hear your view on it. What is still looking like a reasonably valued sector or stock?
Certainly. Certainly, Nigel. See, not necessarily because of this fall, but even otherwise, even before this fall, there are always names that are overvalued and names that are undervalued even within small cap. So even if small cap as a whole is overvalued, there would still be names that would be undervalued, and our team continues to at all times make those changes or adds or trims to the portfolio. Obviously, when a fall like this happens, oftentimes the good names, what were anyways attractive, they may also fall they may not fall as much as some of the segments of the market, where, to use a term that is now very much in vogue, segments of the market where there might be some froth that is built up, but there would be some fall. So what is good thing about this fall is in the last few days is the maximum fall is, at the risk of generalization, has taken place in areas where there was excessive froth that had built in. A lot of the sectors and market cap segments, like be it real estate, be it some infrastructure names, be it, PSUs, some of them, particularly in the small caps. These are exactly the same sectors that had a fantastic run in 2017. So in many ways, the rally of 2023 was a reminder or reminiscent of the big rally in 2017, and we hope 2018 is not, repeated. I'm not suggesting it would be, because that was excruciatingly painful for everyone, if you remember, in 2018, particularly for small caps. But a lot of the names that did fantastically well, even not just sector by sector, even stock by stock, a lot of the names had their prior peaks in 2017. And some of them have seen the biggest knockdown now in the last 1 week or so, which is, I think, healthy or even a deserving correction for many of these names.
Prashant, just want to ask you, in terms of course, you also have an asset management business. In terms of just going back and trying to understand what has exacerbated the fall, why such fierce momentum on the way down, have you been hearing about a lot of redemption requests across, whether it's PMSs, whether it is mutual funds? Just trying to understand, or is it HNI? So what's causing this spiral down? And it's been a continuous one right from the morning.
So from our AMC folks, we haven't heard any of that thing. But to give you some context, we might not be the right example. Even we did not. We actually cancelled last year, mid to late last year, or third quarter last year. We cancelled our launch of small cap fund, probably too early, thinking that the market was small caps were ahead of themselves. And our mid cap fund is an SIP only fund, so we don't take lump sum amounts. So our fund is unlikely to see, even if it is happening in the market, they're unlikely to see that kind of a action that you asked. So at least from our team, I'm not hearing that kind of thing.
Are you worried that if big redemption, the big selling volumes come in the small and the mid-cap space, the depth in the broader markets in these scripts may not be able to take that, and we will see a very sharp fall. So right now, the fall that we've seen, 10% from peak levels, hasn't come in on very large volumes. As you said, you've not heard of big redemptions coming through in the industry. But what if that starts? Does the market have that depth, or are we going to see some big fire sale?
Very true, Rima. That is a risk. If you have another fall in the market similar to what we've seen over the last week or two, then that does become a risk. Because what a month ago seemed like a good depth in the market, a lot of names with very large liquidity, all of a sudden in such environment, liquidity disappears. So highly liquid names, particularly small caps, micro caps, would all of a sudden become very illiquid. And at the same time, if you are selling or redemption pressure, then there is no choice but to push the sale. And that can exacerbate the matters. One thing I would point out, though, in such times of liquidity crunch, the better names, the better quality companies across market cap spectrum tend to have relatively better liquidity. Their liquidity improves relative to the not so good names. Yeah, so it's not that would necessarily save them from going down, but still they tend to outperform in such market environment. They'll be down, but down less than the small cap index, let's say.
Okay, all right, Mr. Khemka, you put it perfectly, right? It's going to separate the men from the boys now. The big boys could come out to bat, put it in cricketing parlance as well. We appreciate you joining in and giving us those views. And as you said, this appears more like a healthy correction rather than a carnage of sorts. For the time being, though, the Nifty has broken the 22,000 odd mark. We're trading a little bit below that level. And the Nifty Bank has taken a bit of a leg down. The next 60 minutes will be crucial for the Nifty Bank because it has the weekly expiry. And now the number of stocks that are advancing are down to around 100 stocks approximately. I'll tell you what, we'll slip into a short break. You come back, we'll get in more market voices. Nilesh Shah will be joining us and waiting for us on the other side. You don't go anywhere.
Well, the pressure is absolutely relentless. The mid-cap index is now tracking a 4% fall, and the small-cap index, for what it's worth, is also not looking any better. Small-cap index is down a little over 4% as well. Big time selling coming through. Nilesh Shah of Kotak Mutual Fund is with us. Nilesh, what is going on? Who is selling? What's happening to this market? You know, the thing is that this is third day running, right? Typically, you know, it's not so one way. There are little bounces here and there. And I don't know how much of this is linked to the nervousness ahead of the stress test, or the results that you all will publish on Friday.
So one thing I can reassure everyone, the stress tests are not going to give any cause for this correction. If we see last 1 year, it was 1-2 ka 3 market. The large caps delivered about 33% return. Mid and small cap delivered about 61 and 69% return. And small cap micro caps delivered about 93% return. Some of those excesses are going out. And abhi ye 3-2 ka ek market bana hai. The small caps are down about 12%, mid caps about 6%, large caps about 4%. So this is the unwinding of the excesses rather than, you know, the stress test of mutual fund. It is stress test of leveraged retail investors who went into kachra stocks. And we have been saying that for some time, that some of the stocks are way ahead of their fundamentals. It is their stress test. And unfortunately for them, they are failing in their stress test.
So just to follow up, Nilesh, on that, no, very true. I mean, I'm not saying that this is caused by the stress test at all, but I think that the tests were being conducted exactly for a day like this, that the reason could be something else, some trigger that leads to the fall. Then what happens? Then can mutual funds ensure orderly, you know, payouts, etc.? What I'm given to understand, at least one of the biggest fund houses that I was speaking to, is that they're not facing redemption pressure in their mid and small cap funds. What have you been hearing, and you know, what are you experiencing at Kotak?
So one, Surbi, we have seen March 2020 COVID era. That was trial by fire, not stress test alone. We survived that. This time we are backed by mutual fund distributors who are hand-holding customers. If in COVID period they could give us 60,000 crore of flows in a market where fundamentals are still in place and only excesses are unwinding, I don't see a reason why real investors will not take this an opportunity to increase their allocation to equity. And on the way down, our small cap funds as an industry, not just Kotak small cap fund, but most of the industry will be outperforming benchmark indices. We haven't invested in kachra stock, and hence on the way down, we are actually outperforming. So this will give more confidence to investors that they should be coming into small and mid cap stocks through mutual funds rather than going direct into the market following the telegram channels.
Nilesh, just one quick question. Why are you confident that the stress test results are not going to give the markets any stress? What do you think is going to come out of it, in your own opinion?
So we have been doing this number exercise for a long period of time. It's just that now this will be shared with public so that they can take an informed decision. There is no better disinfectant than sunlight, and SEBI has always pushed industry to the highest level of transparency. What we are going to publish over the weekend is not something which we are not aware of, that we have been using and conducting forever.
Hi Nilesh, good afternoon and good to see you in. Nilesh, you know, everyone's been talking about that the domestic mutual fund industry is sitting on a lot of liquidity and they're waiting to deploy money. Now we're getting some bit of an opportunity. I wanted, you know, if you have an estimate of what could be the rough liquidity that the industry is sitting on?
So Nigel, number one, we are sitting on a lot of liquidity. But that doesn't mean that I'm going to give exit to kachra stock investors or traders.
True.
If I see there is a desperation in selling by retail investor, by HNI investor, by FPI, or by anyone else, I'm not going to give them exit at a fair price. I'll keep on testing their patience and I'll figure out who will blink first. In March 20, we had money, but we didn't give FPI cheap exit. We kept on lowering the prices to get their portfolio out, and then market bounced back. So markets are ruthless. No one is going to give me a fair value exit if I'm desperate, and no one should expect me to do the same thing. But from a liquidity point of view, let's say there is about 100,000 crore worth of cash sitting in equity mutual funds. We keep that cash for day-to-day redemptions. But if markets are becoming cheaper and cheaper, that cash balance can come down significantly from current level. The second is asset allocation fund stroke balance advantage fund. We can increase allocation to equity in those funds as markets become cheaper. That number on a thumb rule basis is roughly between 75,000 crore to 85,000 crore. Of course, none of them will be deployed overnight. It's a calibrated, gradual deployment, but there is firepower of 75 to 80,000 crore for quality stocks. Then there is SIP flows. So we'll have roughly about 400,000 crore of buying power over next 12 months.
Okay, that's a fair amount of power that you already have, and I'm sure if there's one thing that retail has learned, that days like these typically provide great entry opportunities. So I'm sure that you'll be getting more of that firepower in as well. Nilesh, just a word on the extent of the correction. I know these things are hard to predict, but to what extent has the kachara gotten cleaned out? We are down some 10% on the small cap index. We are down some 14-15% on the BSE SME IPO index, down some 5-6% on the mid cap. The question is, will you keep waiting for better prices like you did in COVID? Or do you think at some point gradually, in the near future at least, when do funds like yourselves turn buyers?
So we will be buyers today. I don't know what my team is doing right now, but I'm sure they will be evaluating opportunities. But as Kotak Mutual Fund and most of the mutual fund industry, we don't invest in SME stocks. Their liquidity is very, very low and governance standards are unpredictable. I believe there will be far more correction happening over there. This is just tip of the iceberg. Even in some of the micro cap stocks, I believe there will be more correction due. The prices had run up fairly ahead of fundamentals. One counter where we have been saying that please exercise caution was low floating stock counters. The floating stock was limited, float was controlled, and limited activity was resulting into higher price impact. Normally, market is pendulum. It either swings above fair value or swings below fair value. So I will say there will be still some correction in SME stocks, in micro caps, but the broad indices are unlikely to witness that kind of correction. It will be, as I mentioned, 3-2-1 market. Micro caps will fall 3 times more than larger caps.
Got that. What about the PSU stocks, whether they're in power, railway, defense? We've already seen about a near 10% correction from peak levels for these PSU stocks. But this is after the stocks have practically doubled, tripled in some cases. Is today a good buying opportunity, or do you think one should wait for lower levels to buy a basket of PSU stocks?
So, Reena, you'll never be able to time the market. I have no ability to sell at the top and buy at the bottom. You'll have to make a guess as to if the seller is desperate to sell, you'll keep on buying at lower and lower prices. If you believe seller is a seller at a limited price, then you'll have to probably look at fair value and buy. My limited point here is that no one will be able to tell you where is the bottom of the stock or a market. We can probably guess fair value. And in the PSU counters where there is low floating stock, I still think there is room for further correction. The valuations were very, very high because of controlled floating stock. And there could be slightly more correction. We will take a call on an individual bottom-up basis. If market is desperate to sell, we will try to buy it at a lower price. If market is selling with a reasonable price limit, then we'll try to buy it at fair value.
Okay, all right. Well, Nilesh, if you could give us a guesstimate on the headline index. There's actually a lot of selling in the broader markets, but on the headline, we're down a paltry 2%. 22,000 is still there. A few days ago, it was 22,400. What are we crying about? So, in case this is we're going to see more amount of selling on the headline index, if you were to give us a guesstimate, what could the crack be? We've seen only 2%. How much deeper could it go?
Nigel, first of all, I must thank you that you believe I am intelligent enough to predict the market. Thank you so much. No one else thinks so high of me. And on Nigel, I had written 1-2 ka 3 market should not become 3-2 ka 1 market. That was based on a chart prepared by an analyst, which showed how micro caps had moved 3 times more than the large caps. So I think the correction is rewinding of excesses, and it will be fair to say that the broad market, the large cap indices will not correct as much as the micro cap indices.
Okay, Nilesh, you've really explained things so well, and in your, your quintessential style, really helpful perspective. Before we let you go, slightly off topic, but it's still something very, very relevant. A lot of people are watching all the block trades that are happening in this market, and there's enough liquidity because big block trades are going through very, very easily. Today was a big one, right? The ITC trade in which BAT sold out. So one question that usually comes up is that while a lot of promoters are selling, and these are cases where either promoters, Indian promoters are selling, foreign promoters are selling, or private equity promoters are selling, one question that comes up is that, who's smarter, the exiting promoter or the mutual fund buyer? Because in many of these blocks, the buyers are, of course, your fraternity, domestic funds, it is us, retail investors. So is that a spot of bother at all? How do you look at the valuations, the kind of, sort of deal-making activity that's been going on, because there are big numbers there?
So, Surbhi, undoubtedly promoters are smarter. That's why they are businessmen and entrepreneur and not an employee like a mutual fund manager. There's no doubt in my mind that promoter is a far, far smarter person than an ordinary fund manager like me. But the time horizons could be different. The leverage could be different. A promoter might be selling to lower his leverage, to raise capital for investing into newer businesses where he may expect much higher return because he is capable of taking higher risk. His risk-return appetite is substantially higher than mine. So we could create a win-win situation where promoter sells and he invests into some much higher risk, higher return opportunity, and a fund manager invest into lower risk, lower return opportunity. But on any given day, promoters are far, far smarter than fund manager.
No, the reason I asked is that, should these promoter exits, should they be seen as sort of a verdict on valuations? I think that's where the concern was coming in from, that are promoters, being the smart guys, exiting at what is perhaps peak valuation? That's, I think, the big question that everybody is trying to get some perspective on.
Undoubtedly, Surbhi, a promoter selling is a flag which one should carefully watch. If he's selling for reducing leverage, no problem. If he's selling to raise capital to invest into another venture, no problem. But if he's selling because of valuation, because he believes his company is excessively valued, then you do your homework 20 times more to check whether you are in right direction or not. On the other hand, if multinational promoters are selling, don't take it as gospel's truth saying that Gora hai to sahi hai. They could go wrong. For example, Coca-Cola left India in the 70s. They came back. So many multinational companies who are selling their Indian subsidiaries today, they'll come back to invest or buy at a much higher price. It is possible. So promoters selling for valuation, definitely a cause of concern. You have to do your homework 20 times to check whether you are right or promoter is right.
All right, Nilesh, as they say, right, before the promoter sells, they have the vision and you have the money, and after that, U-turns. You're stuck with the vision and they have the money. But that's the way things have panned out, Nilesh. And also, I have the highest regard for your word, Nilesh. So we appreciate you joining in. And as I always tell you, I go according to a lot of the advice that you put in there. So I don't stop my sips at all. Thanks a lot for joining in and giving us that quick insight into the markets. Well, as we had that chat with Nilesh, the markets have gone down even further. So the Nifty Bank is now down closer on 350 points. But on the Nifty itself, we're seeing a 400-point cut. So it's not just, the stocks that we're talking about, the smaller stocks, the mid-cap and the small-cap names. Now there is selling at some of these frontline names. You have the Adani Group stocks that are part of the Nifty. They're down 8% apiece. Coal India, which was one of those stocks that went from an ESG concern to an economic play, that India is going to grow, you'll require more power, so you'll require more coal. That stock, in fact, is now down another 8%. Power Grid as well. Some of these frontline PSU names that ran up one way, they have come in for some selling pressure, and now we're down 410 points approximately. Mitesh Thakkar, I think, is back with us. Mitesh, well, the call that you had earlier today, to go ahead, and I think you maintained a short position on the Nifty, that's worked out perfectly well. Tell us, what's the fresh call as of now?
So, good afternoon, Nigel. I think, I mentioned 22,250 as the first support, and I said this time there's a higher chance of us breaking below that, and then we could test 21,950, which is what we are doing right now, and possibly 21,800. And 21,800, 850 doesn't look very far away from here. In case we start breaking to 21,800, then I think I'm even penciling in 21,350, 300 zones. So I think there is more pain left. The structure with today's fall is even turning slightly more negative. Now, if you want to look at the weekly candle, and we are only in the middle of the week right now, this week's candle has, engulfed last 3 weeks bullish candles. So I think very clearly the selling pressure is very strong, and the indicator setup is on the negative side. So one, I believe that 21,800 and then good chance of 21,350 happening is there. Two, I think, as we have been advocating since morning, or since, in fact, yesterday, that long position should be exited. If not done, I think still do it, because there is more pain left, and buy into put options with the disclaimer that we had positioned and we have recommended it to our clients on the Nifty. So very clearly, I think next few days could be choppy because typically corrections are slightly on the choppier side, but the overall bias should be on the negative side, and they should now, instead of in the short term being a buy on declines kind of a market, it would be a sell on rallies kind of a market. On the stock side, I have Aurobindo Pharma as the negative or a sell call. Recommend selling here with a stop at about 1,030 and a target of around 950 on the downside. And Syngene is breaking below very key support levels of 680. So keep a stop just above that, 680, 283, and look for a 640 kind of a target.
Thank you, Mitesh, for that. It's now approaching a 5% fall on the mid-cap index. The small-cap index is a fall of close to about 5.5%. Just 3 Nifty stocks in the green: ITC, Kotak and ICICI Bank. Other than that, all the 47 stocks are lower. Even HDFC Bank, which was holding up in the green for a greater part in the last 30 minutes, has dipped into the red, and HDFC Bank too is now down about 0.3%. We will slip into a very short break. We'll come back and we'll be joined by Prakash Diwan on the other side. We'll also talk about some of the big movers on the way down.
400 points down, and now I'm talking about the Nifty, not any other index. We're at the lowest levels of the day, 21,926. The mid-cap index is down over 2,000 points. We have Prakash Diwan now joining in. Prakash, good to have you here. We've been discussing, the reasons and what's going on. But let's come to the action. What should be done now? Have you been buying anything today?
Good afternoon, Surbi. So, this is very similar to what we discussed about a few days, 4-5 days back. We were talking about the recovery that's been happening in the market and that cry wolf scenario actually playing out, and the wolf is here today. But what do you do? Do you run for cover? Do you really start looking at what you always wanted to buy and just get steeper? But, I think putting things in perspective, things that have moved up 80, 90% have lost 10% today. But they're still, in the last 1 week, cumulatively, certain small cap, mid caps are down 20, 30%. But they're still 60% higher than what they used to be a year back. So there's still some froth. There's still some panic that could lead to better opportunities, is what the screen is telling us. And of course, once the market loses, Nifty loses 120, 150, 200 points, it's the algos that take over. So the pressure is right now more from the incessant selling that's kind of coming in. But I would believe it's not going to rest very soon. There could be some more days like this, if not as brutal as today. And you need to kind of make sure that you buy into businesses that you always like from a business perspective, not just a P re-rating that's happened. And this is exactly where fundamental analysis starts throwing up those opportunities. So yes, there's a long list, a wish list of sorts, but then greed always takes over in this scenario when you want to be a bit greedy and buy lower. So that's what. But you start nibbling into the market. Certain pockets do look a bit overdone. Is my sense. We anyways are not talking about SMEs, small caps. We're talking about even the large caps, which are giving you such good entry points. So the banks, for example, the pharma names. So there's lots to pick out of all of that.
Okay, got that, Prakash. Stay on. We'll, of course, discuss a lot of individual stocks and sectors. I just want to talk about the Nifty, Prakash, because barring ITC, frankly, none of the banks have managed to hold up, not Reliance. None of the other large caps have actually worked. So what is the portfolio tweak that you would work with, even within large caps? I mean, what would be sort of the go-to stocks if you expect this correction to last a while?
So yeah, that's an interesting question. What do you finally do and not just kind of get stunned by this fall that's happening? My simple sense is that this is going to be an opportunity to add on to the bigger names. Let's say ITC today, for example. You saw the way it got absorbed, such a significant quantum getting absorbed by domestic institutions or institutional investors at large. It tells you that there's a bottom that's probably been formed. This was an overhang that's out of the way. The stock would probably, be range bound for some time before it gets digested, but earnings will catapult it to a higher level for sure. You would look at an L&T, you would look at a Reliance, even the banks. I mean, today, of course, they've now capitulated because of the given, the onslaught of the red on the screen. But if you look at some of these private sector banks, I don't see any reason why their fundamentals would start getting questioned. So it's a question of, as I said, P re-rating downwards, but it's not that earnings are going to be jeopardized in any which way. That's the beauty about the sell-off. It's not triggered by any change in the fundamentals or potential change in fundamentals adversely. So it's only a P re-rating, and that is exactly where the large caps will probably be. You'll be far better off buying the large cap because they're really not very expensive. Look at Reliance. I mean, we talk about Reliance being such a promising story in the long term with all the new energy business, the onslaught of the retail venture, the geo expansion. So if that is the case, there's no reason why it would not perform going forward. So you have to look at things a bit more clinically in terms of the earnings potential of some of these companies. Pharma is another pocket that's offering tremendous opportunity. There was no fraud. But along with everything else, it's also kind of given some way. So those are things that we are looking at adding to the portfolio.
Okay, got that. I think market participants have just got a taste of what momentum unwinding is looking like. But let's talk about ITC. That's the top Nifty gainer. after British American Tobacco BAT, a long-term strategic investor in the company, sold 3.5% stake. Why the block deal? Mangalam joins in with the details. Mangalam.
Well, ITC, three words and three letters rather, and 3 words are top nifty gainer. So let me tell you 3 reasons why ITC is doing extremely well. The first one is the supply overhang having gone. BAT has sold 3.5% stake in the company. Their stake now stands at 25.5% versus 29%. What it also does is put brakes on any further sale from BAT for the next 6 months or so. And they've anyway told analysts that they will hold almost 25% stake in the company. So that takes away an important overhang. That's the supply part. The second reason is there was strong demand. The deal was done in the block deal window, telling you that the discount was just about 1% versus its last closing price. And that's a lot lower than an up to 5% discount which was offered, telling you there was strong demand. And why was that strong demand? That brings you to the third reason. The stock was an underperformer from the start of this year. Brokerages were finding value. From 26 times, the stock had come down to trade at around 21 times 1 year forward earnings itself. And now with the supply overhang having gone, brokerages have gone ahead and upgraded the stock. Both HSBC and CLSA and Morgan Stanley does believe that there is good reason why the stock should continue to outperform going forward, with a target price of 491. ITC's up move today is equivalent to that of the market cap of Kansai Nerolac and Imami. And more importantly, the larger story here is the fact that a lot of the foreign promoters have been offloading stake in India owing to higher valuations. And for BAT itself, they've been seeing a lot of correction in their own stock price. So maybe this is one way to fund the purchases for buyback of BAT's own equity.
Okay, got that, Mangalam. Yes, that will always be a point of debate, right? That's exactly what we were discussing with Nilesh as well. Whether the selling signals some sort of at least an interim valuation top. That is the eternal market debate. Thank you for joining in. Speaking of foreign investors selling, let's now go across to Nigel. He's been looking at a lot of the recent deals and what that data and what that trend really tells us. Nigel, over to you.
Well, that's right. British American Tobacco, they sold stake in ITC this morning and they've raised close to $2.1 billion. And this is the third instance of a foreign holder selling stake after the promoters of Timken as well as Whirlpool, they sold their stake earlier. But if the Indian markets are so well placed, then why are these foreign holders selling their stakes? Well, a couple of reasons. Renowned investor Sunil Singhania, he explains it perfectly in a tweet that he put out. He points out that BAT is trading at valuations which are far lower than ITC, in which it holds stake. While Whirlpool CEO Mark Bitzer, he defined it as an asset arbitrage, as the parent is trading at mid-single digit PE, but the Indian listed subsidiary is trading at around 40 to 50 times its earnings. Now, all the three entities, they are cashing in the Indian market, but they're looking at bettering their capital allocation at the global listed firm level. Timken as well as BAT, they've already announced buybacks, while BAT and Whirlpool, they have said that they're looking to deleverage their books and looking at some debt reduction as well.
Okay, very well put. Thank you for, comprehensively explaining that. We'll get into a break. We'll come back with Jigar Mistry, co-founder at Buoyant Capital on the other side. Stay tuned.
Well, at least we've defended the 21,900 mark on the lower end of things, and the Nifty Bank has recovered a wee bit from the low point of the day. So the Nifty Bank was down close to 400 points. Now it's down close to 320 points approximately. So a very, very minor pullback is what you've seen. The problem is number of stocks advancing are just 85. I haven't seen such market breadth in a very, very, very long. So, that number as well should come up for you on the screen. But Ekta is standing by to tell us about a couple of pharma companies that she's tracking, Glenmark Pharma as well as, I think, Glenmark Life. Ekta?
Well, yes, Glenmark Pharma as well as Glenmark Life are in focus because Nirma has completed the acquisition of 75% stake in Glenmark Life. Remember that Glenmark divested that 75% in their API business to Nirma for around 5,651 crores in September of last year. Now, for Glenmark Life, Nirma Group had entered the pharma space in 2005. They had entered it via an acquisition of an ailing injectable business. So they are expected to use this platform for Glenmark Life to expand their base in the pharma space. Now, for Glenmark, interestingly, remember the stock has run up around 135% from its 52-week low. So maybe the gains are capped. But they will continue to own around 7.83% in Glenmark Life and will be reclassified as public shareholders. They are expected to receive around 5,600 crores from the stake sale in Glenmark Life Sciences. They will become, most importantly, net cash positive and will be paying off their debt. Remember, gross debt was around 4,953 crores as of Q3, net debt 3,523 crores. So they will be net cash positive. They are expected to have around 500 crores of cash post payment of debt, and the earlier guidance with regards to no decision on rewarding shareholders will be something which will be taken up by the board, will be something that the street will probably watch keenly.
Thank you very much for that. Prakash, you were just telling us you like pharmaceuticals. Does Glenmark Pharma feature in the pharma stocks that you are interested in?
So, yeah, I mean, it's been a stellar performer, no doubt. And with this kind of a transaction getting through, it does a lot to restore the confidence in the balance sheet to take the growth forward. But I think it's well priced. If you ask me, Rima, when I said pharma, that's where a lot of the good quality mid-cap names have got beaten down for no so-called froth being present in them. So, for example, let me take an illustration of Natco Pharma. It's a small company, nothing very spectacular in terms of size or comparable with any of the pharma nifty names. But if you see the kind of performance that it has been clocking and the kind of pipeline that it has, the lesser you pay for it, if it's available at the current levels of 900 odd instead of 1100, which was a couple of weeks back, you won't go wrong. Your margin of safety improves. And the other thing that the pocket, just to answer the question of what is it that we are specifically looking at, we've taken a list of all the IPOs of the last 1 year. Whichever IPOs have been which have performed very well right from the day of the listing and have not given an entry opportunity. Look at, for example, Tata Tech, and this sector so well. From a peak of 1,400, it's lost 30%. I don't think people have even started evaluating the performance in the true sense because it's yet to kind of build that kind of a case. So with so much happening on the technology side with the Tata Group, all these semicon projects that are getting initiated, there's so much of synergy that's kind of emerging between all the business verticals. I don't see any reason why a Tata Tech can't pay you off. I mean, it's available at valuations which are the softest possible. So, of course, the IPO was offered at a very lucrative $500, but that's theoretically something there which you couldn't buy at. But at least at 1,000+ levels, it's far more superior than buying anything which is not yet kind of been fully discovered. So there are lots that's available. You just have to be patient. Don't lose your head just because of the kind of red that's on the screen right now. And you will find these pockets of valuation which are fairly rewarding from a slightly medium-term perspective and not just a tactical couple of weeks kind of perspective.
Okay, all right, Prakash, appreciate you joining and thanks so much for giving us that fundamental analysis on a whole host of names. Wishing you a good afternoon and a good evening ahead. We see you later on in the week. By the way, you have Shriram Properties. Now, this sort of a market, right? They've launched a new residential project in Bangalore. Revenue potential is 350 crores, but the stock is down 10%. It's telling you the kind of phase of the market that we are in. If it was a couple of months or so ago, the stock could have been up almost 10%. So, good news as well is being ignored for the time being because there is some nervousness that we're seeing. Sometimes this nervousness provides a great entry opportunity on select names. So you'll have to do your research and find those. Well, For the time being, I think our next guest is already standing by. So let's go to him. Jigar Mistry joins us. Hi, Jigar. Good afternoon and good to see you in. First, Jigar, before you ask you about stocks, sectors and markets, what's the feedback you're getting from your investors? You'll had a smaller book that gradually has grown up in the last few years. And you'll have given fairly good returns as well. So what's the feedback that you'll have?
Good afternoon, Nigel. So I think the feedback was pretty consistent. I think we were sitting on some amount of cash, so we are getting inquiries as to whether they should deploy more or not. We have deployed about, I would say, 10% of the cash today that we were sitting on. Still waiting for some bit of more opportunities. The other set of feedback we are getting is from our own sort of the dealing desk. And they're telling us that today they're not hearing any institutional sale whatsoever, but rather NBFC-led sell, which leads me to believe that you might actually be looking at a leverage sort of play being unwound quite sharply. So I think that might continue for 2-3 more days. Hopefully, we'll be able to deploy all the cash that we are sitting on, and then maybe we can call for more.
So this cash that you've deployed today, Jigar, afternoon, can you tell us the stocks, the themes? Where is it that valuations are attractive for you?
Hi, Rima. So see, I think we spoke about a month back or so. And if I take the data from sort of November 1 to 29 February, there are some 211. So in just 4 months, 213 or rather 14 companies have more than doubled. And if I look at the small and mid caps as a percentage of the total market cap in India, that's up closer to 18%. Right? The last time in December 17, it was 16%, which in the run-up to December 19 corrected to a little over 11%. And same, December 07, 10% went down to 8%. So every time you see the small and mid-cap indices roll up to a level not seen before, and obviously more number of companies coming, so that upward trajectory is something that needs to be expected. But then every time a 3-year rolling number hits sort of 35 to 50% mark, the next 2-year returns have always been negative. So as a fund level, we had sort of transitioned to a lot more larger caps. In April 23, we were almost 65% small cap. Today, that number is lesser than 35% for a multi-cap strategy like ours. Historically, we have been extremely large cap in the run-up to this. And then we are sort of buying a few of the small and mid caps, which we always wanted to buy. PVR is one of them. Blue Jet is another. So I think a few of those names in the pharma and sort of spaces which are interesting to us in the small and mid cap space. But please do remember that this is coming from a very low allocation that we have had running into this.
Okay, all right. Jigar, just hold your thought before Surbi comes across to you. Well, we have got a bit of a bounce on the index. We went to 21,900 and we popped up close to 100 points from there. You know, in a day like this, you have to be thankful for the small mercies if you're a bull. So good bounce is what you're seeing from the lows. And the Nifty Bank has popped up close to around 150 points. It has that weekly expiry that will play out as well. So let's see if it can hold on to this sort of a bounce. Surbi?
Well, let's see. I mean, it's come in. We still have just under half an hour to go before the day sort of closes out. But for what it's worth, there's some buyers over there. You know, by the way, I've been trying to speak to a lot of mutual fund sort of participants as well while we're on air. And more than 1, 2, 3 of them have been telling me that they're getting flows. Okay. Even mid-cap funds on a day like today are getting flows. So I think what one of our guests was saying earlier, that if anything, this kind of a complete shakedown perhaps instills more confidence and reminds people that if you want to do mid caps and small caps, maybe best to go through a professional fund manager. Maybe you're not best for the game, leave it to the professionals. You know,
Surbi, just on a lighter note, normally you look at various stop losses, right? Today, you know, where's the stop loss?
Sorry?
You know, where's the stop loss today?
Where's the stop loss?
3:30 p.m. That's the one that's going around.
We're still about a good 20 odd minutes away from that. But
it's been that sort of a day.
It really has been that sort of a day. It's been a
But it's trying to redeem
slide.
itself now by, bouncing back a bit.
Well, let's see the next 20 minutes what happens. Jigar, hi. Good afternoon. What a session, right? What a day. Now, how are you looking at the space, right? And this is not something new. This story has repeated itself every once couple of years. It's just that we didn't hear the story for the last year and a half. Actually, after COVID, I mean, it's been more or less a one-way party. Now, specifically small caps and mid caps, which are the areas that you would venture into where you do some sort of fact-finding, because now you're getting better prices?
Right, Surabhi. So, sort of good afternoon, first of all. But see, better prices for sure. But let's look at the ongoing argument clearly is that because the earnings growth is stronger for the small and mid caps, sort of they are trading at a valuation which is higher does make sense. But when I actually go ahead and check that story, like, so I have the 1 year rolling return data here with me. The market cap for large caps over the last 1 year was up 41%. The EPS growth has been 28%. So there's a 13% expansion in PE. If I look at that for small cap, the number is 71% market cap growth, 13% earnings growth. So 57% PE expansion. For micro caps, so below 500, companies number 501 onwards, the market cap growth is 88%. The earnings growth has been 1%. Right, so an 86% growth in PE expansions. This comes back to the point that you did mention that many of the investors and the new investors have come in after COVID. They think that all sort of dips are, buying opportunities. And whenever they have done that, started with COVID, then happened sort of, I think Russia, Ukraine was 2022, and then 1,000 odd points on 2-3 occasions. And all of them have been bought into, and all of them have made the money a year down the line. So I think that has encouraged a lot of risk-taking behavior where many of these businesses have come to a level where from a bottom-up standpoint, we can't make a lot of sense on why we should be pricing these businesses at that valuation. So unless I think that gets reversed to a certain extent, we might not find a lot of value to go ahead.
All right, let's get straight to the point then, Jigar. What do you buy?
As I mentioned, we have deployed only about 10 or 15% of the cash that we are carrying. Yeah, so we have bought PVR, we have bought the businesses that we owned, Nigel, to be honest. So as I said, 2-3 names that I did mention, those are the only ones. The pharma company Blue Jet is the one that we have been buying. Ramakrishna Forging has been another one that we will be buying eventually.
Thank you very much for joining in. Blue Jet, Ramakrishna Forging and PVR are some stocks on his buying list. We will slip into a very short break. On the other side, we'll get you a few BTST calls, maybe STBT calls from our technical experts. Stay tuned. Welcome back. Approaching the 22,000 mark on the Nifty. The day low today was 21,905. Hit around 3 o'clock, and since then there has been about an 80-point recovery, and now the markets are trying to climb above the 22,000 mark, perhaps to do with expiry-related factors, but there is a little bit of a pullback. Broader markets still continue to reel under pressure, 4.5% gone on the mid-cap index, with the advanced decline ratio at 1:23. But let's go across to Vivek now. He's got some interesting data on the broader market sell-off. Vivek.
Well, that's right. After the stellar rally that the broader end of the markets enjoyed in 2023, 2024, today you actually saw the mid-cap index turn negative. And, just to put into perspective the kind of fall that's been seen, it's been sudden and swift, which is why, the kind of panic selling that you are seeing today. So in just the last 3 trading sessions, we've seen significant sell-off, almost close to 3,000 points of, correction is what we've seen as far as the mid-cap index is concerned. Down over 6% from the recent peak. It's the all-time high that we're talking about. The mid-cap index today, just around 20 minutes back, the advanced decline ratio was 2:98. So only 2 stocks in the mid-cap 100 index were actually gaining, in today's trading session. Now, coming to the small-cap index, the small-cap index has actually had it even worse in 2024. The small-cap index is down over 14% from its lifetime peak. In fact, it's down now over almost 6% for the year itself. When you're talking about the kind of sell-off that is seen, in just the last 3 trading sessions, the small cap index has seen a correction of over 1,300 points. So when you talk about the small cap space, it's something that's seen significant selling pressure. Now coming to the NSE 500 index, it's a broader gauge of how exactly the broader end of the market or the sentiment is, especially when you're looking about the top 500 stocks. Look at that, down for 3 straight sessions once more. Down over 800 to 900 points in just the last 3 trading sessions. Even as we speak, the sell-off is there in the broader end of the markets. And the advanced decline ratio just 15-20 minutes back was 13 stock advancing for almost 487 stocks that were in the red. So significant, the declines outpacing the advances by a very, very large margin. Now, where is the clear pain? The clear pain, of course, is in today's trading session, the utility space. That is one particular space that's seeing the biggest sell-off today. So the BSE utility index is down over 6.5% today, down for the third straight session. Have a look at names like SJVN, NHPC, CEST, Torrent Power. Stocks have been stellar outperformers in recent times, but today they're all taking it on the chin. The next set of stocks to keep an eye out for is the realty space. The realty space, last 3 to 4 trading sessions, we've been talking about the kind of significant selling impact that we've seen over there. Price damage has been quite severe over here. Down for 5 straight sessions. In just the last 5 trading sessions, it's down almost 10%. Have a look at names like Soba, Goddess Properties, all of these stocks taking it on the chin. And lastly, the metal index, this index too has been seeing quite a bit of selling pressure. So, in just the last 5 trading sessions, it's down over 11%. Again, over here, if you look at all of the names, look at names, some of the PSU metal stocks, Coal India, Nalco, Hindalco, all of these names seeing quite a bit of selling pressure. Today, it will be surprising that quite a few stocks have also hit fresh 52-week lows. In fact, some large cap names like Hindustan Unilever, look at names like Z, VRL Logistics, VIP Industries, all of these stocks today have hit fresh 52-week lows as well.
Okay, got that, Vivek. Thanks very much. That's the fall in perspective and the kind of sort of sell down that we've seen today.
Just one more point I would make. You remember data patterns, there was that large trade and the stock went up 40%, right? And everyone was saying, wow, what a big move that we've seen. It was 40-45%, I think, in a matter of 20 days or so. As we speak, the stock is down 10%. The last 3-4 sessions, it's lost close to 20%. I think we should get the stock up for you on the screen to tell you what's going on out there. So data patterns, a stock that went one way. So some money being taken off the table now. Where you've made some money, I think people are just pulling out and cashing out. Pull up the stock over there. That's today's chart. Pull up the last, say, a 1-week chart. And you could pull up a 1-month chart. So even after this cut that we've seen of around 20% in the last 5 days, still the stock will be up close to around 20%, telling you the kind of move that we have seen on some of these stocks just going one way, northward in the last few sessions. We'll get that 1-month chart up for you. Well, let's tell you what to buy or sell today for a reverse trade tomorrow. I think we have Mitesh who's back with us. All right, I think Mitesh is back with us. Mitesh, yes, please go ahead.
One thing, very difficult to say whether we'll open 100 points gap up or gap down. With this kind of fall, there's a chance that any marginally good news will see 100 points gap up opening. While the selling pressure suggests that, we might actually also have a chance of opening 100 points down. So typically when this kind of problem is faced, by a trader, what we suggest is that cut down on the quantity, but go with the trend. So there's a higher probability of us having a gap down. So we'll go with sell calls. But I would suggest don't be very aggressive in taking STBT position, given the fact that we are sitting on nearly about 400 point kind of a decline from the days high, maybe slightly more. I have a STBT on Chambal Fertilizers, which I would recommend selling with a stop at about 341 for a target of 325 for tomorrow. And City Union Bank is a STBT with a stop at 129 for targets of 121.
Okay. All right, got that. Thanks, Mitesh, very much for taking us through today's really difficult day. Of course, if you've got short trades open, Mitesh had one on the index. Those trades have worked out really well. Let's say hello to our next guest on the show. We have Mayuresh Joshi now joining in, Head Equity Research at William O'Neill. Mayuresh, good afternoon. What a day it's turned out to be, right? Absolute slam dunk across the board. Let me ask you about the PSUs first. Have you been out in the market, buying for clients or telling clients to buy any of the PSU stocks that are now down 35, 40, 50% in some cases from their peaks?
Afternoon, Surbi. No, I think we had a few positions, both in the banks as well as the defense spaces. But I think we exited those a few weeks back on two counts. One, as per our methodology, as we look at it at Markets with India, the move was quite stark. So I think they were significantly higher from their 200-day moving average, which is a very, very broad gauge in terms of how we look at the risk parameters and assessment factors thereof. And the second element also was that the valuations had become a little bit more dearer. So to that extent, I think a few names that we carried between the banks and the defense names, we have booked that out. Whether we enter again at this point of time, I think let's let the market settle down. So I think if they do settle down, I think a few of the PSU names, maybe in the power space, where the EPS ratings are looking solid, or some in the banks as well, where the expectations of earnings growth still seem to be pretty stable and strong, may be looked at. But at this juncture, I think we are out of PSU names, as I mentioned.
The PSU positions entirely, is that right?
Yes.
Okay, all right. This just explains the sentiment out there, right?
Mayuresh, what have you picked up over the last 2 or 3 days? The source of this selling, because the mutual funds seem to indicate it's not that they've seen a lot of redemption pressure. In fact, money continues to come in. So, who is it that's selling in the market that's caused this kind of a mayhem?
Not really sure, Rima, but I think what I've been hearing also when I've been speaking to a lot of my friends in the market, brokers, a lot of consultants as well. I think a lot of leveraged positions are probably getting unwound at this juncture. So I think the recent action that has taken place on a couple of brokers and the deleveraging or the leveraged positions which are probably getting unwound, I think that might or seems to be the probable cause in terms of such a sell-off that you see. But I think the sell-off probably is looking very, very broad-based. So I think outside what it probably meets the eye, I think there might be a couple of more reasons to that, but very difficult to pinpoint. But yes, I think the primary thing that I probably am discussing or the discussions are cropping up is that a lot of these leverage positions are probably getting more unwound, and specifically at the broader end of the market.
Okay, all right, Mayuresh, we want to hear more from you on various stocks. For the time being, we'll slip into a short break. Before we do that, I just want to pull up the intraday chart on some of these stocks. Prestige Estates, one of the rare stocks that have seen a big recovery just in the last 20 minutes or so. I recall the stock was down far more, but it seems to be cutting its losses. Prestige Estates, the intraday chart comes up for you on the screen. I don't know what's going on there. The stock has recovered close to around 100 rupees from the low point of the day, moved into the green, and now it's given back some part of that. So keep an eye out on that name as well. Slip into a short break, come back. We'll continue to talk on stocks.
Welcome back. So the screen is looking a little better. Let's see. We've got another 5 minutes to go. Let's see if that close can be above 22,000 or not. Still about 25 points away from that mark. Mayuresh, ITC, that's the other big event of the day, right? So what do you think? A lot of people feel that perhaps the overhang is over and done and maybe the stock's underperformance will end now. What's your view?
So two things here, Surabhi. I think one in relation to the stake sale itself. Yes, I think it's been, the names will obviously come out end of the day, but a lot of interest has been evinced by domestic institutions, and to that extent, the kind of move is a very encouraging sign because the supply has been fully absorbed by the markets. But the other element now that the markets will look for post that the deal is over is the core earnings growth itself. Now, cigarette earnings have been extremely strong. Volume growth has been resilient. And therefore, cash flows, both in terms of the cigarette business, margins holding up, the other FMCG business, hotels business doing exceptionally well, are all positive indicators. However, I think the move that ITC is now embarking upon in terms of more product lines, more products being expected to introduce over the next few quarters, and a large part of the capital allocation expected to take place. I am now willing to look at numbers, and this takes me back to where the earlier growth phase came through. From the cigarette business to the other FMCG business, where a lot of capital allocation was done, and ITC actually moved in a very, very, very tight consolidated range for a range of time. So I think if more capital probably flows into these new businesses, there is a strong possibility that the overall earnings growth might get crimped because of lack of earnings momentum seen because of investments being made in the vertical. So I will wait and watch. The earnings, the RS rating is a little bit on the weaker side as we see it at markets in India. So I think good move today, but I think earnings is something I'd watch.
Mayuresh, do you look at LTI Mindtree? Now, from the beginning of this year to date, LTI Mindtree has underperformed Nifty IT by nearly 20%. And that's quite significant in just, 2.5 months. There have been a spate of recent exits, the latest being the CFO, and brokerages are concerned that maybe these recent resignations may put the merger-related synergies, could jeopardize it or at least delay the synergies. Your thoughts on LTI Mindtree?
I think those are probably the basic moot points on why the stock is probably underperforming Lima. And therefore, I think there has to be enough of sort of clarity to come through. Numbers generally have held up pretty well for the mid-cap IT sphere. But I think a lot of stocks within the sphere are moving significantly higher above their key moving averages as we see it at Market Smith. And the second element in terms of how earnings growth is expected to play out, obviously I think both in terms of dollar and constant currency revenue, it is expected to be reasonably stable. Margins are expected to be stable as well. But my take is that let's wait for numbers, how Q4 numbers probably come out for LTI Mindtree. What we probably like on pullbacks, or we'll wait for pullbacks, are stocks like Persistence as an example. They have moved significantly higher. Any sort of significant pullback onto this stock can become a good buy.
Okay. All right, Mayuresh, shall we leave it on that note for today? Thank you very much for joining in on what has been really a turbulent Wednesday for the market. Third day running, losses continuing. The only silver lining is that there's been some buying at lower levels, as mutual funds have been telling us. They've actually got inflows. Many of them have got inflows, including in mid-cap funds today. Anyway, let's then count down to the tally. 350 points gone from the Nifty, but it's looking better, as I said, than earlier in the afternoon when we were threatening to break 21,900. In terms of the losers, it's a wide list of losers, really. All fall down, starting with PSU stocks, Coal India, Power Grid. You've got NTPC, ONGC, all these stocks losing ground. The Adani twins on the Nifty, Adani Enterprises and Ports, they have suffered heavy losses as well, about 7% gone from those stocks. Then you have some of the FMCG names, HUL, Tata Consumer, all of these names on the way down. In fact, on consumer, ITC is the one that stood out, but it was the only lone ranger. None of the other FMCG big boys kept it company. Speaking of big boys, Bank Nifty is down about 0.8%. So ICICI Bank pretty much, and nothing else there. Neither did IT work, nor did big banks work. Reliance on the negative side. So yeah, pretty lonesome day for the few green warriors that we had on the top.
Well, and they had absolutely no mid-caps for company. The mid-cap index was down 4.5%, the small-cap index down over 5%, and the advanced decline ratio was 1 stock in the green for 22 in the red. 100 stocks, that's it. That's the number of stocks which advanced today. And CPSC, right, the PSUs, got hit the hardest with a cut of 7% at the index level.
I'll give you one more data point. There were 500 stocks that were lower circuit today on the NSE. 500 stocks, no exit, doors closed. And 225 stocks that hit fresh 52-week close today. It was that sort of a day. Well, we've completely run out of time on this edition of Closing Bell, but you stay with us. Markets Forward comes up next.